Friends, I am not a SEBI registered broker, so please consult your financial advisor before taking any trades. These trades are based on my personal experience and the analysis which I have done for my trading. I am sharing it with you. This is for learning. So basically, I have found out one trade in HCL which I am taking personally. If you see here in HCL, we can see double bottom, and after that, the market has taken upswing. Now, based on Elliott's wave, this is the first wave, and then this is the second wave, and probably the third wave is anticipated and it is building up. So now, if you see, based on my analysis, this analysis I'm going to take there is two ways to look at it. I can wait for 2 or 3 days and get out of the trade because it has already moved from this point in time to probably a better position now. And then we are seeing here that the market is consolidating and now it has broken the resistance of the previous rate. So if you see the prior price point, we can see that this is the prior resistance which we can see at this point, but we can anticipate is slightly higher. So let's say if we take that the market reaches at this place, which is the prior high, why this trade is better and why I have selected is because the risk reward ratio is very good. In fact, this is almost 4.36 risk reward ratio. So whereas the profit is around 6%, whereas the loss is just around 1.41%, because this has crossed this resistance, and so my risk will be just below this resistance. If the market reverses, then my stop loss will hit, but with a minimum loss. But if it goes up from here, there is a high chance that it will hit the prior resistance, which is which was this point. And beyond that, the market, of course, can go to any price point. One risk with this particular trade is this is a IT organization, and then we know that the recession is hitting and multiple organizations are laying off people. So from that market news perspective, this might be a risky bet, but I am taking it based on my technical analysis because I am seeing that the Elliott wave is intact and there is a resistance it has broken. And even if I have to take a risk, then the risk is very minimal. Without taking risk, we cannot trade. So I personally take a risk where there is a minimal risk and there is an opportunity to make money around risk reward ratio of 1 is to 2 or 1 is to 3 and 4. So here we are getting opportunity of 1 is to 4, which I feel that it's a good opportunity. One more thing is we can analyze the weekly chart. Now if you see the weekly chart, there was a consolidation and the market took a very good positive momentum, but then the market has come down, and then if you clearly see, there is a double bottom and the market is trying to make a fresh move. Now, after so many weeks, the market was in uptrend. It took a correction and then it consolidated. Now the market is going to move up. So I don't see here there is any um, red candles which indicates that the market is going to move in the downward direction. All I see is a positive candles in the weekly chart. So those are the reasons which gives me conviction that the market might move uh, in the positive direction. So this is my analysis for HCL. Um, so here my plan is I will exit in next 2 to 3 days before this starts consolidating at this particular level, and once it moves up and again it consolidates, probably here it may move up, so I can do my trailing stop loss which I am planning to do on this particular trade. So these are my thoughts on HCL technology for 6th February. If there is I will see in the morning if the market is withholding this particular resistance and not breaking it, then I will take a fresh positive trade here for as a buy. If I see that the market is breaking this resistance tomorrow in the first 1 or 1.5 hour, then I will not take this trade. So, thank you very much, and hope you have a good, positive week ahead. Thank you, everyone.